Katrina, we just had mega-cap tech earnings, 3 of the Mag 7 report yesterday. I want to focus on today, though. What is your word of the day?
My word of the day is breadth. And the fact is that we are expecting the returns of the average stocks, so those 493 stocks that don't make up the S&P 500, to actually start to work. And that view is really driven by the fact is we look at 2-year forward earnings expectations across the market. We're looking at growth in all of the sectors on that 2-year basis. So we think it's now time for the rest of the market to work.
All right, so you think the rest of the market is primed to start working. Is this a valuation question? We've been talking a lot about valuation this week, specifically because of DeepSeek. I'm looking at the forward PE on the Mag 7. That's 31 times. The 493, it's about 19 times. So is it simply a valuation situation, or do you genuinely think that these other companies, the 493 as we keep calling them, they have better potential for earnings growth?
You know, it's so funny. I do actually have to make one small correction. The S&P at the moment actually has 503 stocks, so it's the 494. So there's an extra few in there. But the fact is that let's talk about why. You look at R1, and that's obviously what's been the talk of the market over the past trading days. And I look at the efficiency gains that are being driven by these changes. And those efficiency gains are going to mean that AI can get spread out across a broader part of the economy, so that we're going to actually see a lot better returns from AI as it is deployed a lot wider. And that's also a part of the reason we're positive on the rest of the market. I think in terms of direct AI plays, you've obviously seen so much of the benefit go to the Magnificent Seven. The valuations do reflect it. And we think that there is a combination of good earnings potential, of good valuations, as well as some structural factors that are going to make the rest of the market work during the rest of the year.
So, Katrina, you have a pick for us today. What is your pick? Why is this a good move for today?
Look, I think that where we see some of the best opportunities are in the small and the mid-cap growth space. And so we're looking at a way to play that in a focus. So we have a U.S. mid-cap multi-factor ETF. And that is the type of product that you want, where you can invest in it and you have the ability to benefit from the fact that the U.S. is getting back its animal spirits. If I take a look at the U.S., the consumer sentiment numbers have come in very strongly. Those good sentiment numbers are going to drive U.S. GDP growth because we're 70% driven by the consumer. If we have good GDP growth here in the United States, we're going to have better than expected earnings. And that all really supports the fact that we think that better earnings growth is going to translate into better stock performance.